To the Pulver Report. It is 9 o'clock on the 13th of May. Let's get started for today's session. We got a big week ahead. Let's dive into everything. Just posted a couple things on Discord. We got the high impact news for the week. Some notables. U.S. data includes retail sales, PPI and CPI. We have Aussie employment and pound employment or UK employment as well. Earnings wise is a little bit lighter than last week. We have 352 companies reporting, but there are some notables in there. I'm seeing, let's see here, Alibaba on Tuesday morning, Home Depot for the health of consumer. We have Cisco. See if what a goodie. We'll get into the AI space. That's Wednesday after market. Walmart Thursday before market. JD is Chinese retail before market Thursday. Baidu before market Thursday. John Deere, Under Armour. Let's see here, and that's kind of how I'd filter it out. So there's probably, I don't know, 5 to 7 companies I'm interested in looking at some earnings. We obviously can just go through the list and see if anything else stands out, but our earnings season has treated us pretty well for the Q1 reports. Optimism's there. The market's up. I did want to take a look at some technicals this morning. There is a bit of technical concern if we get up to these highs. Let me show you. This doesn't have to be so large. But one thing that tends to happen is right here. So we have our high right here, our all-time highs, and we're pushing back up towards it right now. Now, if we see a test of that high or even a slightly higher high, we definitely have some divergence on the momentum and relative strength index. So that would tell me that we might not have the power to go, significantly through the highs. Therefore, I'm a little cautious going into this week's trading as far as the end result. Doesn't mean that we can't go higher. In fact, having a shallow pullback, we might see, this market try to breach the highs, get up into here to this 18127 extension. Let's say it can stretch up into 530 or 540. I mean, we'd have to have a pretty broad lift, I think, to get the market to push that much higher. I think where we open today is going to be interesting. We're opening pre-market higher about $1.40. The DIA opening up about $1 higher, and the Qs opening up about $1.30 higher. So I have a feeling they all look about the same, where all-time highs, momentum doesn't agree, and relative strength doesn't agree. Now, that doesn't actually print divergence yet. So this line right here where we had a high connected to this high, that's because price does make a higher high. So if we do see a higher high, that's going to come with some divergence that I would be a little skeptical of. I don't think it necessarily turns me into a bear, but more so gets me into protection mode and see if we can let the markets drift a little bit higher until there's possibly another correction soon. And historically, I'm sure many of you are familiar with the saying, sell and may go away, but that really isn't the case. Through May, I mean, the markets historically show some pretty good tendencies through June, July. Let me go to the A1 Edge Finder, and then I had my good friend Charlie Bolello put some pretty good news out this weekend. Let me see if I can find that screenshot. Yes. So S&P returns from 1928 to 2023, from May to October, 71.9%. And the rest of the year, everyone says it's more bullish, November to April. So let me write this down so everyone can see. So if we go from, this is the S&P 500 positive total returns from May to October, right? 71.9%. 9%. And November to April, is 72.9. So the saying "sell them may go away" doesn't really make any sense, because if you stayed a active participant May through October, the total returns are still pretty darn solid. If we go into seasonality here with the 10-year average, let's go into month to month. There we go. This is what I'm looking for right here. So on the S&P 500, the 10-year average in blue, June is still expected to be a positive month. Positive month, positive month. The 5-year return, more positive in June, pretty positive in July. August, still positive, and then everyone's dreading that old September effect. But through this summer, we had a correction. We've had a pretty swift recovery, but we're not quite at all-time highs. So it's going to be interesting to see what this week gives us. I tend to think that the news this week, the PPI, CPI coming out Tuesday, Wednesday for the U.S. The forecast for CPI is 3.4. I think with oil prices kind of leading the way, and then looking back, I think that the CPI data is going to come in a little bit softer. Otherwise, that'd be 5 missed forecasts. I don't think that the forecasting's that off, or they're going to kind of make it a little bit intentional to make sure it comes in 3.4 or lower. And is that enough? Obviously it could be priced in. It may not get a bigger bump to the upside. But watching closely this morning in Equities on Demand, the first thing we should be checking is, let's see how our SPY and DIA are doing. Market's expecting to see, $12 move, $12.58 move on the week for the SPY. Qs, $14. DIA, $8.50. But this has actually been keeping pace with I think I'm going to be taking profit this morning on the DIA if possible. If we have enough extrinsic value left in our reverse iron condor, 396 is up another $1.20. Man, I would like to see where we're at. Pretty sure we're in here. So I think we're up. Where did we start this trade? I think we started in the 380s. Let me double check my trade here. So I'm opening up Telegram, Equities on Demand, SPY. We did a 391. So this is up at least $5 and change. We had a 425 debit. It was up to like 550 last week. Hopefully we're opening up that or higher. I might just take my profit on the DIA this week and not really worry about it. We'll see what that gives us for opening bell. In case it opens, floats around here for the day, maybe opens. Mondays are not typically a directional day. So I'll take the open, see what it pays. If it's over $6, I'm probably going to take the profit. If it's high fives, probably taking the profit. We said last week, if we're up a total of $2 collectively on all the positions, which IWM you can see is not cooperating. So QQQ, 443, just off the recent highs. This one was around break even or so. 439, and we're up to 4. That's only going to be $4 and change. And extrinsic value. So again, I need this to, try to get back up to these fresh highs. Let's see here, 446, another $3 or so. I want to see if this one gets up to like 4. Well, I guess the highs are 448, 449. We cover the cost of our trade, get maybe, an extra $1 or $2. That'd be good. My concern on the Qs, so a couple things. Divergence could be the deal. Technically, we could be, pressing the highs, testing the highs, failing at the highs because momentum isn't there. We could test the highs, break the highs, breach the highs, just barely. But divergence would be there because we'd have higher highs in price. We'd have momentum and relative strength showing that hidden bearish divergence. On the backside of this trend line, the Qs, this looks pretty... Well, it just looks like we technically could have a reason for the bears to resume something to the downside. But we talked about this last week in the trading rooms. For the most part, the earnings consensus has been pretty positive. Companies have been a little bit more optimistic. Recession worries have gone down. The fear and greed index have gone down. Everything's kind of neutral. The market's doing its thing. The Fed looks like they're going to be cutting two times this year. That still is out there being kicked around, whether they will or won't. But the Fed watch tool has adjusted enough so that it seems like the indication shows that it will be somewhere to the look. 0 to 2 is what we're likely dealing with. in the highest probability. But I mean, I think the market likes to latch on to, okay, I think they're going to cut. So that's still the highest probability right now that the Fed's going to cut in September. We get through this month, there's no Fed. There's no Fed, Fed rate decision expected to change as far as our monetary policy of 5.25, 5.5. That's all current. So this is the pause. This is the pause, and those are fairly high percentages. September, 50% probability that they cut for the first time. November, still pausing, and then December. Right now, December is not quite a lock for 2, but your highest probability is still there. So anyway, market's anticipating September is going to be the first rate cut, and whether that's the good stuff that's getting priced in, which is kind of crazy because, again, the big rally was, 6 or 7 cuts expected. The market ripped from October to March, this year. So October last year to March this year. And here we are, the market just kind of digesting. Things look okay. Fed's not going to cut 7 times, so maybe cut 0, maybe cut once, maybe cut twice. And the market's like, we're okay with it. But we've also had a pretty big shift in yields. So if you go shift to the 2-year yield, recently on the daily chart, we had recent highs around 5.05. Came down in a pretty big way by about 20 to 30 basis points. The 10-year yield, same thing, highs around 4.74, came down around 20 to 30 basis points. That did equate to a little jump in bonds. So your IEF off the lows, that's your 7 to 10 year. Your SHY is your 1 to 3 year. Pretty big jump off the lows there, 81 to 80.90 really, to 81.30, 81.40, and then the TLT from 87 up to 91. So we've had some decent bond price movement. We have some decent yield movement, and the stock market continues to drift higher. Okay, so priority today, check on the index plays for today, see if we can get some of that extrinsic value to get us paid. Realistically, if I said last week, if I'm up $2 net, I'll probably take profit. Realistically today, if I'm up a net $1, last week I was up about 55 cents on Friday when I checked. If I'm up $1 on everything, I might just take the profit and say, I don't need to sit and wait through this week's news. We might establish something a little bit more directionally neutral instead of being slightly, more biased to the upside right now. So it is in my best interest as far as my positions to have the bulls be a little bit in control for today, tomorrow, have a little bit more of a nudge to the upside to get me closer to the profit levels that I was looking for. Okay, so let me go back in and say good morning, everybody. It's been a few minutes. So good morning, Chris, first in. Nice to see you. Trish, good morning. Angela, good morning. Donna, good morning. Lynn is here. Catherine's here. Willard and Gary, nice to see everybody. And happy Monday. Perfect. All right. Notables this week, we talked about that. Calendar this week, we talked about that. Sector performance year to date, I posted that as well. Year to date, Nasdaq's up 10.67, S&P up 10.12, Dow's up 4.77. Bitcoin still hanging in there above 60 plus. Oil has been down. Let's take a look at those really quickly. Dollar index can't make up its mind. We still see some support in here. I could still see a technical case for the dollar to. I do think that if the dollar, look, if we're going to see kind of stubborn highs, or even what you might even say like irrational highs, or the market keeps going higher, if that's going to be the broader choice of the markets here to go up and start to break technicals where it's like, hey, look, it's oversold or it's overbought in this case in the stock market. If it's overbought and it still goes up, that could be because the dollar's weaker. There's still that possibility that the Fed, in dripping in some dovish news, could hint that they're going to cut rates. Whether this is only once or twice this year, remember that the market's typically forward thinking. There could be something where the market takes and runs, like starting 1 or 2 rate cuts this year is not where the Fed's going to end up, right? If you go into, I can't get into December of 2025, but if we go all the way out to September of 2025, so that's out about a year and a half, we're looking at these rates down to about 4 to 4.25%. So that is another 100 to 150 basis points off of current levels. And so I think once the Fed starts, we start in September. Let's say we do two. Let's say we officially do two. Well, there's probably another 4 rate cuts expected for 2025, right? So at some point, if the market's going to latch on to that and that rate cut cycle, then that could give the market chance to run for just cheaper rates, and the dollar probably takes a pretty big nosedive, I would think. Now, I would like to see the dollar. Obviously, what I like doesn't matter, but I'd like to see the dollar get it to this area. Either equal highs or slightly higher highs, and I would love to sell the heck out of the dollar at 107 to 108. That's where I'd like to sell it. Okay. That doesn't mean that that's the spot. I mean, if the dollar is holding, we have some efficiency here. The dollar, ripped off of that. If we have a trend line break and we have this trend line support area and the dollar still shows some resiliency, I like that trade. I had said earlier, technically, all the dollar pairs seem to be a bit fragmented. Euro dollar, pound dollar, probably my better dollar strength trades. Dollar CAD, same thing as well. So if the dollar does get stronger, I'll look to play it against the euro and the pound and the CAD. I'm still going to be long dollar Swiss. That's not going to change. But Aussie dollar, New Zealand dollar have not been as cooperative. Aussie dollar's had some pretty good resiliency this year. The Aussies have been pretty strong. So anyway, if the dollar catches a bid around this, this 105 area, this 104.50 area, then like I said, I think euro and pound get a little bit softer against the dollar. Dollar CAD's been doing pretty well for us, and the dollar Swiss, I'm going to continue to add to that position. But bigger picture wise, if the dollar can get up into this 108, 109 zone, I would love a sell trade there. Somehow, stubbornly, the dollar gets all the way up to its previous highs that we had back in 2022. I would certainly be looking for bear pattern to emerge either here or here, and just get on the bandwagon for a dollar short. Oil still has to prove it wants to stay bullish. I think that the integrity of this bullish market is in jeopardy. I don't think oil is necessarily coming all the way back down into sub 70, but we are slow to prove some bullishness. I'd say right now we've got to see oil get back to above 82 or so, break this trend line, start to put in a near-term low, and then see if it's maybe range bound. There could be some choppiness here. We have oil resistance all the way at the $92, $93 level, and we have lots of support in the 65 to 70 zone. So oil is probably not my favorite trade right now. I'm just watching to see, when oil was up, inflation was sticky. Oil's been down. That's why I think inflation is going to be softening up for this week's read. We'll find out. Gold and silver. Gold's been hanging in there. Still haven't broken recent highs. The highs around 24.32. Haven't broken those as of yet. There might still be a correction. 1, 2, 3. If that is the case, try to find. I'm hoping I can find it actually. Some levels to be buying. So I did take a little buy trade on GLD when we were at these recent lows, and it's up a little bit. That's fine, but I'm obviously more excited about getting some fresh highs on gold moving forward. And it might be choppy. Silver, same thing. Had a good last week, not quite at the highs at 29.80, but I think this $26 level continues to hold pretty nicely. I would love to see silver continue to work its way up. I do have a lot of expirations this week on the May 17th on Friday, silver being one of them. I've got an SLV credit spread, 25.88. We have a 27 by 26 for 60 cents. I don't mind taking the assignment on SLV because I'm longer term looking to be long on this instrument anyway. So if we go to measure move levels, that's 32. We get the channel highs that pushes us up to 37.38. There's two measure moves here, 32.76 on SLV and all the way up towards nearly $45. And that's why I'm more willing to hold it. HOLD. I'm willing to hold SLV and actually own the underlying asset as opposed to, options would help kind of add to the profits as far as like juicing those profits. But as far as holding, I want to lower the cost basis, over 30 to 45 day cycles and not have the time work against me if I was just long on the option. So anyway, SLV, if I have some ownership, great. If it gets above 27, I'll take my 60 cents per contract and we'll work from there as well. But longer term, I'd like to see if silver can make some fresh highs this year before the end of the year. Okay, and Bitcoin trading around 62.9. And we still have not breached this trend line. I'm looking for a daily close beyond this trend line right here. A little bit of a wedge is forming. One thing that'd be nice would be a chart alarm around 65,600. Let's say we break above 66,000. We get above 66,000, possibly showing some additional optimism to get back and retest the highs. Do we get back and retest the highs and have more indecision? Possibly. If the stock market can't grind out, bigger moves to the upside, then Bitcoin might also do the same thing where, we have some support down here, we have some resistance above, and we have a range trade, possibly. Everyone's been excited about the, $100,000 mark, and myself included, but we will see what the price ends up doing. I just want to see if we can get up above around 66K. Look like we can break out of this wedge. Otherwise, it's coiling, coiling quite a bit, and we'll see if this ends up making a break to the upside. All right, currency pair wise, not much has changed from Flex Room from last week. Aussie CAD's been doing really well. This is probably one of my better performing positions right now. I'd like to see Aussie CAD get back to 9,500, which means there's some good space available. So we get the Aussie CAD to break this level. Some pretty open space for a solid. That's not bad. That's 400 to 500 pips right there. I would get fairly excited about that Aussie CAD. I've already been long in this one. We started to buy in at equal lows. We started to buy in on trendline breaks. We started to add in on some Masterflex bullishness on some non-FIFO trades. If we have a nice little head and shoulders all the way back up here to the high, that'd be a great profit. And that's what I'm going after on the Aussie CAD. Aussie Swiss, still long. And we're trying to squeeze out some fresh highs. We took some profit on the Aussie yen, or the yen crosses last week, and I decided that I'm not going to force any trades on the yen pairs if we have, 500 to 1,000 pip intervention candle, or not candle, but an intervention week. We had Mondays and Wednesday. It was like a Japanese holiday Monday, and then Wednesday was right after the Fed. That would have been May 1st. So end of April, early May. Two notable interventions from the Bank of Japan, and I just think it makes price very difficult to predict. You're trading inside those intervention candles. You're wondering, is it going to happen again? If so, when? Can we trade it? Can we control it? Can we put our stop loss in? Is it going to be honored? So I just thought, why take the risk? I don't think it's worth the risk. So took some profit on the yen crosses, and that's it. We have some overbought conditions on the Aussie New Zealand. We did take some profit here. We were long at 108.64, took profit at plus 100, and we're sitting up at 109 and change. Let's figure out what this thing wants to do. If this is going to form maybe one more high, and it's a three-drive pattern, it looks something like this. 1, 2, 3, 4, 5. Come back into these highs around this 111 area, and then possibly break that structure and sell off. Okay, we'll see. I'd like to find another good trade on the Aussie New Zealand. I tend to follow this one very closely. Technically, this pair has treated me very well over the years, and I'm looking to see if I can have another big sell or another big setup. Whether that setup is resistance here with some type of pattern, maybe a bigger range in this area, but I would like to lay down, bro. I wouldn't mind buying low at 105 and taking profit at 111, or if we have a chance to see it up here at 110, 111, and we can get a sell trade. What are you doing? Get out of there. Come here. Come on. Oh my gosh. He just gets down. Now he wants back up. Benji, ladies and gentlemen. Okay. Anyway. That's Aussie New Zealand. Yen crosses. I say leave him alone for right now. So they, if you survive the intervention in a good way, what are you doing, bro? You're messing with my workspace here, dude. Aussie yen. There we go. So we had our Monday intervention. There's our Wednesday low. It was a pretty good trade. If you didn't get busted up by it, this was a pretty good trade. I think if anybody was actually paying attention, buying it here. So we had the intervention low. We came back and tried to test that, breaking that trend line, getting long, tight stop loss, profit, finding the pocket, finding this halfway point. It's good. I mean, it technically was fine. But I know that not all traders from 105 down to 100, so really a 500 pip intervention over 2 days, it's not that easy, right? CAD yen, same thing. So you can see that, all those kind of double bottoms on that Wednesday candle failed. So that was a pretty straightforward buy, stop loss below. You got to take risk on the yen crosses. You got to trade small, but you're looking at a trade that's, up 200 pips or so, and I'm happy with that. If that was coming back into the intervention pocket, it's a good spot to protect, to be safe, and don't do anything stupid. That's pretty much my point. Euro yen, same thing, right? Drag it from high to low. We pulled back. You're filling into this efficiency right here. It just does this thing. Pound yen, I'm still holding pound yen from a robot trade. If this one comes up and fills this pocket as well, same thing. All the other ones have been closed out for profit. All right. Dollar pairs, like I said, I like the euro dollar and pound dollar better, but there's no confirmation yet. So if I'm looking for dollar strength, I need to see this trend line break. Hasn't happened yet. Burns is asking, what forex trades am I in? I will tell you the currency pairs that I'm in right now. I'm Aussie CAD. I'm long in the Aussie CAD. I'm long in the Aussie Swiss. I closed out Aussie yen for profit. Closed out Aussie New Zealand for profit. Aussie dollar no trade. CAD Swiss I'm long. Swiss yen no trade. Euro Aussie no trade. Euro CAD no trade. Euro Swiss I'm long. Euro pound no trade. Euro yen no trade. Euro New Zealand. We're waiting for a buy trade on Euro New Zealand for right now. Euro dollar no trade. Pound Aussie no trade. We're waiting for a trend line break on pound Aussie to get long if it's going to hold structure. Pound CAD we're short. So I'm short on the pound CAD. Pound Swiss I am long. Pound yen holding that one right now. That's a robot trade. Pound yen I'm long, but stop and limit is pretty tight on that one. And then pound New Zealand, we got stopped out last week for a small loss. Pound dollar, no trade. New Zealand CAD, I'm long. New Zealand Swiss, I'm long. Dollar CAD, I'm long. Dollar Swiss, I'm long. Okay, those are all my positions. So, and these are a lot of these have multi-entries. So multiple entries on most of these Swiss pairs, Aussie CAD, New Zealand CAD, multiple entries. Yeah. So what's the total? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I'm in 11 currency pairs total. After closing on some of the yen crosses, I probably have 50 or 60 positions running all collectively between all these positions. But those are my positions. Okay. So that's some currency discussion. Oil, gold, silver, we did. PPI, CPI this week. Aussie news, pound news. And we're going to see what the market's made of. So it is just in the middle of May. We're still in that kind of pre-summer push. Does the market get excited about maybe staying bullish into the end of this month where maybe nothing can disrupt it? That could be the case too. Considering we had the correction in April, and the market at the end of April started to put in a bit of a bottom. It's been fairly resilient in May. We're going to see if the market's kind of justifying, after a 5, 6, 7% correction, can we get back to all-time highs, and can we possibly drift higher? If we can, like I said, I will be protective of those levels. Overall the portfolio is doing pretty well, and I'm just going to keep taking my stabs. Okay. Any other charts you'd like me to review? A couple stocks that I think will be interesting to watch this week. I do have some interest in them. Alibaba, I have some exposure in this. These have been some technical trades I've been waiting for a while. We have waited to see China kind of start to get a little bit more vocal and speak up on helping their markets instead of feeling like China's closed down economically and still very quiet. These are two stocks I've been watching. Alibaba, if we came into a double bottom, I would have been very interested in getting long. I wanted to get long. I am long right now, but I was hoping that we'd come back into this $63 to $60 zone, and I would have started to position, just based on that technical structure. But instead, I did get into some trades a little bit early. I was over here looking at some support. I thought this would be a solid head and shoulders position, left shoulder, head to neckline, right? So we have left shoulder, head to neckline, right shoulder. I thought if we carved out this low over here that we'd start to go up. You can see that that wasn't the case. So once we started to decline, I stopped participating as much and trying to take those anticipatory stabs. And now I just said, well, we've got some confirmation. Price is looking a lot more attractive now to the upside. So I'm more bullish, and we're positioning for it. I'd like to see if we get up to these levels in the next maybe 6 to 12 months. We do have earnings on Alibaba this week, and I think that's on Tuesday or Wednesday. So that's going to be tomorrow morning on Alibaba. So I'll keep an eye on that one. Baidu is another one that I'm sitting in with a covered call at 102. Earnings this week, as long as we stay above 102, that's fine. Obviously, if earnings are solid, that looks great. If earnings are a little miss, I still think we're going to stay pretty firm around this $195 zone. But it'd be nice to see some price to the upside and some earnings support it. You look back here, positive earnings, positive earnings, positive earnings, even as the stock was declining. So that had more to do with sentiment than I think it did with the actual company performance. Okay. So anyway, I'm pretty bullish on both of those, Baidu and Baba. FXI is another one that's large cap China. This has been up quite a bit to start the year. This one did actually have a really nice double bottom formation, and it's up around 34%. And I'm starting to participate in a lot of ways. I mean, I've got some naked puts at like 24, 23, and 22. So those are doing pretty well, just collecting some income on those. I don't think I'm looking for any like dips and pullbacks to see if we can. I'm noticing on the daily chart overbought conditions with some divergence. So if we have some pullbacks, I wouldn't mind getting in some dips. And then K-Web is another one that's been performing pretty well. 22 to 31, pretty good gain, up around 35, 36%. So still plenty of upside potential here. Measure the move based on symmetry. If we get back to this high, it's 36. We get back to this high, it's 42. I mean, I like looking at a chart thinking there's upside potential. How can I participate? And this one looks pretty promising. So K-Web, FXI, Alibaba, Baidu all look pretty good. The Hang Seng is HSI. This one, equal lows, just rip into the upside. Again, a pullback is probably needed. But, up 28, 29% off the lows, and doesn't really look like there's much of an objection until we get back up to these highs around 22,000. So, it's been a rip to the upside. I do think that a correction or pullback or pause is needed, but this could be a bull flag easily, right? There's your rip, a little bit of a flag, and then we look for more. So maybe some bull flags versus having it be high volatility. Okay. All right. Euro dollar. We did the euro dollar. We looked at dollar index. Euro dollar. I don't have a position on it. Right now, euro dollar is still making lower highs and possibly looking to make lower lows. So I look at something like this. Euro dollar, a slight channel. So if we are heading to some resistance, we're filling this little pocket candle right here. As long as we stay below, I'd say as long as we stay below 109 and we get some confirmation to sell, stay below 109, get some confirmation to sell, I think euro dollar looks pretty good. Again, the dollar index has to cooperate with that trade. There's no way that I'm going to sell the euro dollar if the DXY is also going down. I need to see the dollar index going up, and the euro dollar I think is a pretty good correlated trade with that. Fair? Okay. Okay. Any other questions for moi? It's 9:36. I'm getting a message from the A1 trading team that if you'd like to come back and join me for another segment at 10 a.m., I will be live with Nick and the team. So you can just come back to my channel, youtube.com/Chris Pulver Trading, and I just tag team and stream with them, and we'll talk some more. I'll look at the portfolio here. Opening bell has already happened, so I'm going to check some positions, give myself about a 20-minute break before I start the session up at 10, and I'll let you go for this little intro for the week as we kick things off. Okay, so it should be a big week. Let's see what the news brings in. Let's see what price action does. Set your chart alarms. Trade accordingly. Risk is important. And I'll see you in about 20 minutes. Swiss yen, Joe, what do you want to do with Swiss yen? It's a yen pair, so that's already a strike against it for me. And it's the Swiss yen, which is safe haven, safe haven. I don't have anything I like about this currency. I would say longer term, if this structure breaks, I'm a seller of the Swiss yen, but I don't see that changing anytime soon. I think for right now, you got to deal with the intervention candles and you just let it do its thing. Comes up to the highs, maybe comes back down to the lows. It's just going to be, look, we have intervention. I see if this carves out a top. We watch that structure. Eventually, if it gets on the right-hand side of it, that becomes a better sell trade. To me, this intervention stuff it's frustrating because we don't know when it's going to happen, right? And as far as yen strength and its unraveling to the carry trade, we don't know when that's going to happen. I don't think it's happening right now, so I'm very reluctant to say Japanese yen strength across the board, right? But the Swiss, I've been long against the Swiss all year. So Aussie Swiss long, CAD Swiss long, or CAD Swiss, Euro Swiss, Pound Swiss, New Zealand Swiss, Dollar Swiss, and I'm killing it. So Swiss yen, not really a currency pair that I want to trade outside of what I'm showing you on the chart here. If it all sets up this big topping pattern, I think there's a valid setup. Otherwise, I'm staying out of it. Okay. All right. Come back and join me. I'll be back on in 20 minutes. Just come back to the channel, youtube.com/Chris Pulver Trading. All right. See you in 20 minutes. Bye.